and welcome. You're watching The Money Show. I'm Kavita Thapliyal, and this show is your one-stop guide for all your personal finance queries. And this is the show where we not only talk about different investment strategies for you, but also get your portfolio queries answered. Just in case you want to send across your question and want our experts to help you with aligning your investments with your financial goals, just send across your queries on our WhatsApp number and our email ID that's flashing on the screen. So let's begin the show, and today let's begin with the monthly AMFI numbers. That's right, the latest AMFI data shows that equity mutual fund inflows have slowed down in October, coming in at 24,690 crores, a 19% fall month on month compared to September 30,422 crores. Now, this marks the second consecutive month of moderation in net equity inflows, seen as the mutual fund industry's total AUM hit a fresh record of 79.87 lakh crores, up from 75.6 lakh crores a month ago. So what's actually going on? On one hand, investors continue to put money into mutual funds. SIP inflows, for instance, remained robust to over 20,000 crore for the month. But on the other side, there's a clear cooling in incremental equity allocations. The data also shows interesting divergence across categories now. Small cap funds, they saw inflow of about 3,476 crores, lower than September, 4,363 crores. Talking about mid cap funds, that slipped even more sharply to 3,807 crores from 5,085 crores. However, if we talk about flexi cap funds, that bucked the trend with inflows rising to 8,929 crores from 7,029 crores last month. Now, this indicates, or this is indicating, investors may be preferring more diversified, flexible mandates amid rich valuations in certain pockets. Meanwhile, if we look at debt funds witnessed a strong rebound, net flows of almost 1.59 lakh crores, reversing a sharp outflow seen in September. And gold ETFs continue to attract money as investors sought safety and diversification. Overall, the October AMFI numbers suggest that while India's mutual fund participation story remains strong, investors are perhaps turning a bit cautious on equity valuations and rebalancing towards debt and hybrid categories. Now, let's break down all of this and what these numbers really mean for investor sentiments and market direction. I'm joined by Anil, Ghelani and Arnav Pandya to decode all of this. Hi, good evening and welcome both of you. Anil, I'll come to you first. The AMFI data shows the net equity inflow at 24,690 crores in October, down almost 19% month on month from 30,422 crores in September. From your perspective, what does this drop tell us about investor sentiments right now?
See, in my view, the sentiments are broadly intact. If you look at the disciplined manner in which the money is coming, for example, in the form of the SIPs, which remains to be strong. We have got around 29,500 crores in SIP, which is slightly higher than in fact last month and at sort of like all-time monthly highs. So the discipline of the regular investing, in my view, remains stable and intact. Yes, some part of the lump sum investment, some part of maybe the redemptions, which is bringing down this net inflow slightly lower, has been seen in this month. And I believe, as you very rightly said, that in equities, little bit lower amount. On the other side, if you see like in the hybrid category, multi-asset funds, they have seen excellent inflow. So if you look at not just month on month, which has been increasing for multi-asset, but even if you see, let's say the average of last 12 months for all the like multi-asset funds, the average has remained in the range of around 3,200 crores. And the month of October, we saw around 5,300 crores as net inflow. So I believe that, as you very rightly pointed out, FlexiCap bucked the trend with higher inflows. Likewise, multi-asset allocation fund also have bucked the trend and given higher inflows. And Kavita, if you look at one particular thing on the other side, like I've been regularly watching some of your earlier shows also, and some of the reports which come up on your channel very interestingly put out that last month we saw auto sales as one of the highest ever, basically, and we saw like year on year, October 24 to October 25, around 40% increase in auto sales. Likewise, if you look at laptop and smartphones, like, very sharp increase. So, in some way, like I feel this GST Bachat Mahotsav and boost to the so-called consumption also could be one of the reason why that lump sum spending or some kind of redemption which has gone to acquire this discretionary spending could have been the situation. But otherwise, important to note that the straightforward standard approach of disciplined investing into the SIPs has remained intact, which I believe is a very healthy point to observe.
Look at the debt-oriented funds that saw a net inflow of almost 1.59 lakh crores. After an outflow of almost 1 lakh crores in September. And look at gold ETFs also maintaining strong momentum in terms of inflows. Of almost 7,743 crores. Now, so are we trying to also say, Anil, that investors are going beyond just diversifying in equity, debt, gold? What does this actually tell us about investors positioning themselves, investor behavior, and the kind of signals that we are getting from an investor mindset?
Structurally, if we look at the large inflow into the fixed income category, that is predominantly led by, in my opinion, the liquid funds, and that I feel is quite a large corporate treasuries driven flows, which often tend to reverse back after September and quarters. So if you look at September 2025 number, broadly I remember it was negative approximately 65,000 crores in liquid category, and this month it is up by approximately 90,000 crores. So that is the key aspect of it. But yes, you are right that even if you look at some of the other categories like money market funds or even low duration fund was a standout for me. Around 7,500 crores has come into low duration funds. So some bit of allocation by investors definitely has been considering the way in which market scenarios have been going towards debt, maybe low duration, maybe some part getting allocated to liquid for temporary parking. And interesting point you mentioned is about the commodity based, both gold as well as silver, and how we have seen the remarkable increase in that over the past 2 months. I think some part of it was driven by the sharp rally that we saw in gold as well as in silver. And in some way, I think it is also some amount to do with asset allocation. So when investors invest into the multi-asset allocation fund, some component of that goes and parks itself into the gold ETF and silver ETF. So that is an interesting number to keep in mind. But yes, definitely, I agree with your point that there have been certain set of investors, especially maybe some set of investors who are well guided by prudent financial planners, financial advisors, who have been doing a little bit of asset allocation on their own as well, and moving some amounts from maybe equities into commodities as a prudent diversification in their asset allocation.
So taking the conversation ahead now, Arnav, can we say that investors appeared more selective amid market volatility and valuations also? In the slowdown in equity inflows, is this a sign of concern about valuations? Are investors perhaps waiting for a better entry point? How would we understand this balance, caution versus opportunity in the current market environment mindset of our investors? Arnav.
So if you look at it, I mean, I wouldn't say that investors are worried about the market situation, because if that was the case, then you would see actually a fall in the SIP numbers. See, the SIP numbers is like the base. That is the regular amount which everyone is contributing each month. Now, on top of that, when you layer it, whether there are lump sum investments or whether there are lump sum withdrawals, you will get the net figure in terms of what is the equity inflow and outflow at the end of the month. So investors are still willing to invest. The question here only is that the investors are also taking a very clear view in terms of where they are going to invest. So an example clearly is also of the fact that you have this higher amount going into gold funds when gold is rallying globally and it is hitting new highs. So if you look at the assets under management of gold funds, that has also crossed the 1 lakh crore mark. So if you look at it, investors in a way should not be concerned in terms of whether there are some ups and downs in terms of the net inflows, because according to me, a 24,000 crore inflow into equity funds is a very healthy number. And over a period of time, if you look at it, it will keep going slightly up and down. The worrying thing would be that if this plus the SIP number, both of them plunge very sharply for a couple of months together, then that might show a slight reversal of trend. So according to me, at this point of time, there is a steady investment philosophy which investors are looking at, and they are continuing on that path. Some outflows and inflows will keep happening.
All right, a sign of investors understanding the purpose of diversification and going more hybrid. So we can say that if you're a typical SIP investor or a first-time investor, you should just need to stay put and continue doing your SIPs and participate at odd market levels, and that's the biggest benefit an SIP really gives you. With that, thank you so much, Arnav and Anil, for being on the show and helping our viewers understand the AMFI numbers and decoding the investor sentiment and mindset behind that. But for all our viewers, the Money Show is still on. Time for a short break, and post that we'll be joined by Nisreen Mamaji to answer all of your portfolio queries. But before I slip into that break, I'm going to flash our WhatsApp number and email ID where you have to send across your portfolio queries.